All right, let's talk business right now. All things financial. Bring in financial expert and advisor Andy Fass with Fass Wealth Strategies. Andy, nice to have you here.
Thanks for
When we
having me.
last left off Friday, the Dow dropped 900 points. I said, all right, Monday morning, let's bring in Andy and explain what happened and where we're going to go from here. What happened on Friday with that huge drop?
Well, as you know, China said that they were going to put export controls on rare earth minerals. So in retaliation, President Trump decided to say that he was going to raise the tariffs on China products from 55, where it is now, to 100. Market wasn't expecting that.
Right.
So as we've seen in the past, back in April, market reacted, and we get these crazy swings in it.
So it's substantially up today.
Yeah.
So what changed between Friday with the surprise announcement and today? It's gained more than half back.
Right. Well, over the weekend, President Trump said, "Don't worry, everything's fine. China wants to get along." And so, you know, again, the market doesn't like uncertainty. So when we see these shifts, these swings, it's a total overreaction. I mean, long term, I mean, if you look what happened back in April, middle of April, we were down at 37.
Right.
And then a few months later, we're at 45, 20% gain. So you can't look at these daily crazy shifts. You got to look at the long-term perspective of what's happening.
But you, with your people, like anybody that I talk to as a financial advisor, on days like Friday, people are calling your office in a panic, saying, sell, or what should I do?
Right.
What do you tell people when the Dow has a bad day?
Well, we say, hang on, we have a plan. We've seen this movie before, right? Again, I go back to what happened last year, or excuse me, back in April, and say, this is kind of the new norm. There's so much information out there.
Right.
And the markets have access to this 24/7 cycle. We just got to hang on, stick to the plan, make tweaks as we go along the way, but not panic. Panic is the worst thing you can do.
It's amazing, and you talk about the power of the spoken word last Friday when the president comes out or President Xi says something in China, how much the markets are so reactive and jittery that one person can drive it like happened Friday, right?
Absolutely. It's almost the power of the spoken tweet also.
Yeah, spoken tweet,
you know, again,
absolutely.
It's that overload of information. And for the average investor, again, what you've got to do is keep everything in perspective. If you have a 401k, you keep contributing to it. You know, on down days, that can almost be looked at as a buying opportunity.
Absolutely.
You don't want to buy when everything is always high.
It could be a good thing. It could be an actual good thing.
Sure.
So is AI, the new whatever, is that driving the markets higher? I feel like it's overinflated, the markets, but...
You know, I should have brought my son here to tell you about AI because, you know, I'm an old guy. I don't understand all of it. But yes, to a great degree it is. There's a lot of optimism about what AI is going to do, you know, for businesses and technology. From our perspective, while, you know, there's a lot of opportunity there, we don't want people to get too far out over their skis about AI because there is some speculation that there may not be as much of an application for AI as everybody wants. You know, the early adopters like computers and phones are always making money and they're pushing things forward. But you want to be cautious. You don't want, you know, there's a lot of investment in AI, but that may get to a point where these investors can't invest enough in there to keep up the growth.
Gold or silver? I see they seem like cheesy ads on TV all the time, and I'm like, if gold and silver is such a great investment, why are these cheesy ads on TV?
Yeah.
What do you tell people about gold and silver?
Well, first of all, William Devane is a great actor.
Yes,
Rolling
he's a
Thunder
great
was
actor.
a great movie. You know, certainly people have made money in gold. Gold's been around, obviously, thousands of years. But gold is basically backed by what somebody will give you for it.
Right.
It's not backed by a company that's manufacturing something or something that's contributing to the economy. We tell people to be cautious about buying gold, you know, because...
You're not saying no.
I'm not saying
what
no.
What about silver? Same thing?
Same thing with silver. There are some industrial applications, but that's the minor part of it. People are buying it because it's going up.
Yeah.
Well,
it looks hot.
It looks hot. But there's some research now that we've been reading that's saying gold may not be as great an inflation hedge as everybody thinks it is. So again, like most things, if you have part of your plan, part of your portfolio diversified, gold, small amounts.
See what it does.
Right. But again, remember the liquidity aspect of gold. It's only what somebody will give you.
That's absolutely true. Andy Fass, thank you for coming in today.
Thank you for having me
Appreciate that.